A lot of customers have been coming in, trying to get rid of their old or scrap jewelry.
We have a lot of customers that they come by and they, any condition, and they sell the gold. Between 10 to 20 people come in a day.
People are still spending, they're still buying. We're buying a good amount back from our customers as well, but we've been selling a good amount of gold.
So we sent our FBN cameras and our intern Viang to New York City's 47th Street, which is paved with gold, but even more so these days, as store owners in the famed Diamond District are besieged by customers frantic to cash in on record high prices, which are clearly in up and away mode. I mean, as both gold and silver continue their sprint to fresh record highs, right now we've got gold, which blasted to $4,100 a troy ounce earlier today, now at $4,124 per ounce. This is the aftermarket, but on the other side of the gold coin, oh, by the way, silver at $50.54, up 7%. The other side of the gold coin are investors who are clutching the safe havens on fears inflation is far from tamed. Both metals, though, have just jumped exponentially in the past 3 months. You can see gold gaining 24%. And silver up 35%. By the way, silver is at its highest since January of 1980. My next guest has been stocking up on gold bars, gold nuggets, and gold miners his entire career, I think even since he was like in second grade, and now says more than ever, investors should be adding glitter to shine up their portfolio, not selling. He's Euro-Pacific Asset Management Chief Economist and Market Strategist Peter Schiff. Peter, you're pretty much gold's #1 fan. You say don't be selling it to get $4,100 an ounce in cold hard cash. Buy more at this price?
Yeah, first of all, Liz, spot silver is at $52.20. It's actually, you're quoting December futures,
correct,
which are normally above the spot market. They're actually below. I think we're setting ourselves up for a huge short covering rally. But this is an all-time record high for silver. It's eclipsed the peak from 1980. Now, not adjusted for inflation, but just the nominal price is now higher than at any point. And in fact, gold year to date is up 56%. Silver's up more than that, but gold's up 56%. That is the biggest one-year gain since the 1970s, and we still have 2.5 months left. But when gold started to move like this in the 1970s, it was the beginning of a huge move. Gold went from $35 an ounce when we began the decade to $850 when we ended it. So I think this is the beginning of a much bigger move in both gold and silver. And, first of all, what it tells you about the stock market, the U.S. stock market's really been in a bear market for 26 years, because in 1999, the Dow was worth 45 ounces of gold at its peak. It's now worth barely 11. So that's a 75% decline in the real value of U.S. stocks measured in real money. But I think what we're seeing now is a warning sign, similar to the warning that we got in 2006 when subprime blew up. That was warning about the financial crisis that hit the following year. I think what we may see next year is a U.S. dollar and sovereign debt crisis. The world is divesting of U.S. dollars. Central banks are unloading dollars in treasuries, and they're buying gold. And I think this means the U.S.'s ride on the global gravy train is coming to an end, because we base our whole standard of living on the dollar's reserve status. We use that to consume more than we produce and to borrow more than we save. And when the world doesn't want our dollars anymore, we're not going to get their goods. They're not going to loan us money by buying our bonds and our mortgage-backed securities. So Americans are going to be looking at much, much higher consumer prices, much higher interest rates. And this sovereign debt and currency crisis will make the 2008 financial crisis look like a Sunday school picnic.
Well, gotta look forward to that. Peter, when you joined us, September 18th of 2024, because you've been with us since then, but you had first recommended a company called Agnico Eagle Mines, ticker AEM, and you also like Pan American Silver Corp. So this is more than a year ago. If you look at how they have exploded since you recommended them, are these a good play if people can't afford $4,125 gold bars or an ounce?
Well, first of all, you don't have to buy a whole ounce of gold. You can invest whatever you want. You can buy gold ETFs. You could buy fractions of an ounce. And silver, people can buy silver $52 an ounce. You can buy plenty of ounces of silver. We sell silver and gold at Schiff Gold. But I really like the mining stocks. Pan American Silver is probably the highest quality of the silver miners. It's not up as much year to date as like a Coeur d'Alene or a Hecla. But if you look at a longer-term chart, Pan American didn't go down nearly as much as those stocks did, so it didn't have that lost ground to make up. But it's a great quality name if you're just going to buy one and you want less downside risk. Agnico Eagle also hasn't done as well as some of the lower quality miners in the last few months. But zoom out, it's been a phenomenal stock. Okay. AEM right now is $171 a share. I've owned it for 20 years. I bought my first shares below $10 a piece. So it's been a huge winner in the gold space when a lot of other gold mining companies were having a lot of difficulty. But pretty much now you could just throw a dart. I don't see how you don't make money buying any gold stock or silver stock. I think the whole group is ridiculously cheap and the earnings are exploding. There's no other sector of the market that has the earnings growth that gold and silver companies have. And Wall Street has completely missed the boat so far. They haven't been invested. In fact, a year and a half ago, they were putting sell signals out on the mining companies because when gold was at 2,000, they thought it was the top. They said that there's no upside in gold. Well, it's more than doubled since then, and Wall Street still hasn't really embraced these names. Now, I'm just starting to see, for the first time, I've been in the financial industry for 35 years. This is the first year that I've seen any firms, like Morgan Stanley came out and said maybe the 60-40 portfolio should be 60-20-20 with 20% gold.
Right.
I think investors are just starting to buy.
Peter, good to see you. It's your time to shine, definitely.